So, hello and welcome. Thanks for registering for our webinar panel discussion hosted by world leader in building analytics software, CIM. Building on the success previous sessions in the series, it's great to see so many industry colleagues joining us, knowledgeable and keen to learn and share. Your chair for the next 60 minutes. My name is Jim McClelland. I'm founder and editor of SustMeme, home to both the magazine and the top 500 rankings. Our topic today in the Future of Building Operations series is driving superior tenant satisfaction. Our panelists will delve deep into the current market, obviously, for commercial real estate, CRE, trends in occupancy and vacancy, what the drivers for those might be, how tenant needs are changing, what's expected by them of their buildings, and how we boost retention and attraction, plus how data is supporting day-to-day tenant needs. Sometimes, of course, working behind the scenes via AI, for example, but it's still delivering energy efficiency, cost savings, comfort, ultimately that improved tenant satisfaction. So let me introduce our panel. Joining me on screen this afternoon are Michael Purcell, Director of Asset Management at Eagle Street Partners. Michael joined Eagle Street just after its formation, December 2020, coming from JLL, where he spent some 12 years managing a wide range of asset types. Real estate investment specialist, Eagle Street worked to acquire, develop, refurbish, manage assets, offices in Dublin and London. The firm currently has, for instance, over 1,200 PRS units to build out in Dublin's North Docklands, plus some 650,000 square feet offices across UK and Ireland. Mark Stansfield is Senior Director of Analytics at CoStar, 20 years experience analysing, researching, presenting on trends in commercial property. Mark manages the CoStar team of UK analysts responsible for their analytics output, as well as covering London markets in particular. He works closely with their news team to report on key transactions, issues affecting commercial property across all the sectors and regions. And he's a busy chap, member of the Society of Property Researchers, of the Investment Property Forum and European Commercial Real Estate Data Alliance. And Michael Young, who's Global Head of Partnerships at CIM. CIM, our host today. Michael's responsible for growing and supporting a global network of partners, helping them deliver enhanced value and innovative solutions for their clients, as well as the buildings they manage and occupy. Background in mechanical engineering, Michael brings to the table experience in automation and an appreciation for the challenges and the opportunities in modern facilities. He has a master's in applied computing, worked in data and analytics industry for many years, helping clients unlock and realize the real world benefits of quality data. So there we are. It is all live, as you will soon know, and recorded, and everybody will receive a copy of the recording following this broadcast. So audience, please, we are on a pretty tight schedule. If you do have questions for our panel, please pop them in the box. Should be at the bottom of your screen, helpfully tagged Q&A. You type them in there and we'll try to get round to as many as possible in the final part of the session, plus pick others up offline after the event. Also, I should mention, this is nearly it from me, kindly take a moment to complete the very short survey once we end the webinar, because that feedback is really helpful to the organisers. Right, let the debate begin. So we're off. The current CRE market. Kicking off the discussions, we want to explore the current state of the market globally, as our audience is drawn from around the world. So, Mark, I'm coming to you first. CoStar publishes a range of studies for the CRE sector, investigating trends in vacancy, occupancy, rental yields, etc. So, I'd like you to give us some context for our discussion. You have some recent content and charts to share, I believe. So, it's over to you. Tell us, how are we looking at the moment, Mark?
Yes, thanks, Jim, and good afternoon, everyone. Hopefully you can all see my slides. And yeah, I've just got a few charts just to set the scene, looking at office demand and vacancy rates more broadly before we get into the detail around tenant satisfaction. So a few key trends to highlight, beginning with the wider picture on office occupancy, with data from Remit Consulting showing that occupancy hit a post-pandemic peak in February as employees returned to offices in greater numbers. I've certainly had my face in more people's armpits on the tube each morning, albeit with a notable slowdown on a Monday and a Friday. So what does this mean for vacancy rates across the country? Well, this chart shows UK office supply, demand, and vacancy trends over time. all driven by CoStar's real-time data on more than 500,000 properties across the UK. And the key takeaway here is that national office vacancy has risen from its pre-pandemic low as demand has fallen and new deliveries have hit the market. It now sits at a 6-year high. And while demand, as measured by net absorption, shown here in orange, did turn mildly positive in the final quarter of last year, vacancies continued to rise. And they're likely to rise further as a wave of supply hits the market in 2023. But the picture does vary by location and building quality, with the office market never more polarized between the best and the rest. On the location side, some submarkets in London's West End, such as Paddington and Westminster, have vacancy rates still below 4%, as shown here on the left, which contrasts with double-digit vacancies in submarkets in Docklands, the City, and Hammersmith, which have been more impacted by the pandemic. There's also a clear flight to quality trend playing out across the country, with firms upgrading space, even as many reduce their footprints as hybrid working becomes the norm. We've seen evidence of this in our net absorption data shown here, with demand in the best quality 5-star rated buildings positive throughout the past 3 years, especially in 2022, and all the demand losses coming in lower quality buildings as firms prioritize buildings with ESG credentials and good amenities to lure in staff and welcome clients. And this trend is expected to persist this year. BREEAM ratings are increasingly prized by tenants, and we've seen this in our data with buildings rated outstanding and excellent, attracting far more demand than BREEAM ratings lower down the scale, as occupiers become ever more discerning and look to burnish their green credentials. We've also seen this in lower void periods and rental premiums. And these trends are helping to support office rents at the prime end of the market in all major cities, even as average rents remain stagnant. Record rents have been recorded in nearly all major markets since the pandemic struck, with rents now pushing £40 per square foot in all big 6 regional cities, with some very punchy rents paid in London at the bottom there. And just ending with another note on London, and although the UK capital has been hit hard by the pandemic, our data shows that Paris and New York have been hit harder, albeit with notable differences by submarket and building quality, as mentioned earlier. I wrote a piece on this recently that I believe will be shared after the webinar. But for now, I'll hand back to Jim to pivot back to tenant satisfaction more broadly.
Excellent. Thank you very much, Mark. That's a really useful start for us. As you say, some return to the office is happening, faces in armpits, as you say, but inevitably vacancies on the rise. Nice points about polarization, the best and the rest, and the flight to quality. And I thought in that regard, the graphic you showed distinguishing between the 1 to 4 star and the 5 star was really telling, literally, whether up or down. So Michael Purcell, and we're using full names here because we have 2 Michaels. So Michael P. Purcell, thinking a little bit about what Mark said and the topic more broadly, what are the implications here for the CRE sector? I'm assuming strong impact on overall asset performance and profitability.
Yeah, thanks, Jim. And Mark set it out very clearly from data, real life knowledge. I suppose it's very hard to have a macro view. As Mark said, it's very specific. I mean, we're seeing assets where have good amenities, good facilities in the right locations are exceeding our lease up projections. And if you're not doing that, you're not reaching those levels. I suppose what COVID did was really accelerate what we're already doing. So it accelerated the whole ESG criteria, measuring utilities, etc. We'll come on to that later, I think. But we need our assets to work harder, and a lot of the smart funds have been doing this well before COVID. It's just everyone's on the train now and have to do it, and to make your space and your buildings more relevant to tenants' needs, and that's good end of trip facilities, excellent Wi-Fi. Transparency in terms of the data and utility usage that you can show tenants. It's not rocket science, not difficult, and that builds credibility. So I think it's everything that Mark said, and it's very specific. We're seeing to individual markets and those specific properties in those areas. Are they relevant for that market?
Excellent, thanks. Nice point there and take on it. So as you say, hard to take a macro view, lots of specifics, lots of variables. I like the way you describe COVID effectively in this sense as an accelerant, especially not least for things like ESG. It might be interesting to see how that plays out, because in corporate and financial markets, there's a little bit of a backlash beginning, or shall we say, some concerns about the targets looming 2025, 2030, that some of the ESG promises are built around. And we saw Larry Fink didn't use those 3 letters in his letter this year, for example. So it'll be interesting to see how that ripples through and the domino effect for the property market. 2 other key words: transparency, credibility. I think we're going to come back to those again, especially in terms of what we use data for and the stories we tell. Which brings me nicely to you, Michael Young. Your view, effectively through a slightly different lens, CIM being a tech provider to the CRE market. So what does all this mean for Cretech?
Yeah, so thanks, Jim, and hi, everyone. Look, one of the biggest trends we're seeing, or a significant trend, is a real increase in demand for these type of building analytics and intelligence solutions. And, you know, not just up here, but globally. It used to be that traditionally Australia really led the way with these types of solutions because of their focus on neighbours and sustainability. But now, of course, due to the trends that Mark has been talking about, but also in no small part due to the energy crisis that we're facing, we're seeing a real uptick in demand for these types of solutions. But it's an interesting point that Michael raises there, talking about how assets really need to work smarter, or work harder, sorry. We really see the opportunity for assets, leveraging technology now for assets to work smarter. Because absolutely, building owners are under huge pressure to deliver for their tenants in terms of sustainability, better working environments, reduced energy bills. And it's interesting because traditionally they would have expected, to be able to deliver on those things, they would have had to, gone for capital intensive projects. They would have had to, put solar panels on the roof, replace out all the light bulbs to LEDs. The great thing is now they can absolutely work smarter. They can really leverage tech to really help them get the most out of what they have. And a great example here, even in Cork, we have a 100,000 square foot building that we've just deployed on, a pretty new building, only 2 years old, and already we're after delivering around 60,000 euros worth of savings, a 600% return on investment in only the first 5 months. Really because the building owners there decided to really optimize their existing equipment, fans running at excessive speeds, boilers, multiple boilers coming on and staying on instead of some going off, air handler units using chilled water valves when they could open an outside air damper. So that's just an example of really where they're leveraging this technology now to really work smarter, to really optimize their buildings. And look, just another trend as well, probably worth mentioning, it's not just building owners. We're really seeing now that the operational teams, the property management companies, they are really the ones now that are an expectation is on them to be able to deliver for the building owners, deliver for the tenants as well. So we're seeing a real increase in demand as well across property management companies for this type of technology.
Excellent. Some very good, very nice points and specifics made there. So as you say, demand for analytics, intelligent solutions is high and rising, and assets need to work not just harder, but smarter too. And owners are under pressure, as you said, from tenants, obviously, in terms of their demands and expectations, but also it's a pincer movement. They're under pressure from investors as well on the other side of the equation, stranded assets, so that they are in the middle there under pressure. But tech can help, really help. And as you say, the solutions, the answers are out there. These are not questions to which we do not have answers. You gave an example of potential ROI as well. There are lots of opportunities and positives to be had if we're looking in the right places. So moving then on from trends and drivers, we've got a nice start, a nice flavor of where we're at and where we're we're going to look a bit more at where we're going. We've seen a substantial change in the market pre and post pandemic, in particular, as mentioned, vacancy up, occupancy down. It is improving. We're not at pre-pandemic levels yet and may never get there. So if I bring it back to you again then, Mark, so we've not recovered those levels. My blunt question is why? You know, it's covered in the media. We're all doing it. Hybrid working. Is that the only or key driver? What else is happening? What different choices are building tenants making now, Mark?
Well, yeah, structural changes and the rise of hybrid working clearly having an impact. CoStar News actually ran a survey early last year which revealed that 80% of firms are now operating a hybrid model, and that's up from 20% before the pandemic, with full office adoption dropping from 75% pre-pandemic to about 15% today. So this has had obviously big implications for the amount of space firms actually need, and also how offices are being used, with more hot desking, meeting spaces, with collaboration becoming the major purpose, and notable spikes, as I alluded to earlier, on Tuesday to Thursday. And we've seen numerous examples of firms upgrading their spaces but taking less of it. A big example in London late last year was law firm Clifford Chance pre-letting 330,000 square foot in the city, but that's less than half the amount of space the firm currently occupies in Canary Wharf. And these trends and the pivot towards shorter leases are still playing out as leases expire.
Excellent, thanks. So yeah, structure changes, as you say. Interesting statistic there, 80% on hybrid, and we all know of firms where there's negotiations going on in terms of getting people back into the office, and obviously recently acquired habits are proving hard to shake in some cases. But changes in terms of the space and the needs and the use of that space, as you say, more collaborative working, meeting spaces, and also obviously spikes Tuesday to Thursday. Occupancy is not consistent throughout the entire week, so maybe more hot desking is appropriate. So it's not just the sheer volume of space, but it's the way we're using it. And you made a nice point about the upgrades going for better, but often less, so it is less is more in terms of quality, but not in terms of the sheer space, obviously. So we're looking really at some of the detail of it now. So Michael Purcell, if I come to you, so if your office properties, tenants, what sort of drivers and trends have you been seeing? And as an absolute minimum, what do tenants want or need now? And crucially, can you deliver it?
Yeah, and I suppose the key to that is understanding what a tenant wants. That's your starting point. And the only way really to do that meaningfully is to meet your tenants. It's very simple, I know, and it sounds very simple, but not everyone does it. Physically taking the time to meet them, like any of our assets, we sit in on our tenant meetings on site on a regular basis with tenants, literally face to face, to see what they actually want. From there, then you can build a detail of how that property can deliver what they want. And that's the key for existing tenants. Obviously, then you'll see in terms of attracting tenants in, that's a little more difficult. You're really doing it from a marketing perspective, and what looks good in a brochure, but what's meaningful as well. What we're seeing is, I mean, there's some minimum bars. Your Wi-Fi connectivity is an absolute must. Reduce the need for away leaves and bring in, there's tons of smart companies out there who provide like backbone systems, so there's no away leaves, instant access to Wi-Fi, you're not waiting around. Amenity space, it's if you have the space in the building, be it in a basement or a common area, reception area, fine, you can work with something. If you don't, then you just need to work with tenant space, and they might have a plan already and they're fit out for that. And I suppose the on-site team is critical. And we also put in tenant engagement platforms, which makes it easier for tenants to integrate with the building, particularly coming from COVID. Staff mightn't have been there for some time, so they just don't know basic functioning of the building in terms of fire assembly points, opening, closing times, who's my security team, etc., etc. So there's smart tech around that to make that easy for tenants. And HR love it because it takes a headache out of their hands. And it's very easy when you're integrating new staff members. So it just, what we're trying to do is tick all those boxes to take away the pain for tenants existing and coming in. And we find that very useful. The companies using the tenant engagement platforms, and there's some smart things that we're doing. We think it's smart in that we can give potential tenants temporary access so they can see the building on an app and see how it works before they ever get to the building. So it's just really, I suppose, to recap, it's really listening to what your tenant is currently saying to you in the building, and then monitoring, like markers from Mark there, what tenants are looking for in the market and trying to align that, and being transparent. And your badges, like I mentioned, Wi-Fi, so your wired score gives the credibility behind that, that you have a level. And a lot of the ESG badges are the same, especially the BREEAM in use and the WELL and the Fit Well. They build the credibility around what you're doing. It's hard to keep telling tenants, this is what we're doing, this is what we're doing. But if there's a recognized badge there, that just copper fastens it. Yep.
Excellent, good. So yeah, especially then in terms of retention, it's about understanding what your tenant actually wants. And a lot of that involves meeting them face to face. So engagement, relationships, obviously attracting tenants is more difficult and there are more variables involved. I mean, you pointed to the obvious essentials like Wi-Fi, and you talked of a nice tenant engagement platforms as well. I could just ask you one little extra there, Michael. So are you seeing that tenants are asking more questions? Are they being more demanding, getting more fussy, more picky? Or is the onus on the landlord or the owner to be going to them and flushing out what these needs are? So are you getting pull, or is it all still push?
There's no straight answer to that. I suppose a tenant really doesn't know all the questions they need to be asking at the early stage. But if we present in such a way that, listen, this is what you're going to come up against, and this is the solution to it, and then it's out of their way, and that goes back to transparency. So it's just helping the tenant along that journey. It is very difficult, and they're trying to grapple with how many people they need back in the office. I mean, tenants are trying to survive week on week, right, month on month. So they're not going to, if someone hasn't looked at service charges in detail or utilities or rates, etc., that's not their bag. They're just trying to understand their main function and understand the numbers they need to get back, how often they're going to be in, how much hot desking they may or may not need. So if they have the answers to those few things, they're ahead of everybody. So everyone's trying to grapple with that, and we're just trying to come in to make everything else easy.
That nice point, yeah, because you get a real flavour there of the challenges they're facing in volatile economic markets and trading conditions for them as well in their businesses or services. So as you say, transparency, and it's trust. It's about building trust within reason, and that's that relationship and talking. So then and I would remind people, if you want to pop your questions in the Q&A, and we'll be getting those towards the end. So we're beginning to get into the real detail and maybe have some differing opinions on how we're going with some of this as well. So Michael Young, coming to you then now. So taking a view from the data AI perspective, what Mark and Michael P have been discussing, so a lot of that's current trends. They also, though, give some signals and signposting towards the building of the future. So a challenge to you, Michael Young, is will we be able to make this happen, this building of the future that we can see emerging in people's hearts and minds?
Yeah, Jim, look, and I love hearing about these type of challenges that Michael's talking about, because as a data junkie, right, and again, really hearing particularly about Michael there, and piggybacking on what you're saying again, Michael, you're talking about, really trying to understand or align with the tenant's needs. And as a data person, I really see the advantage of leveraging data, leveraging technology, not just to understand their needs, but even get ahead of and predict clients or tenants' needs. And that's the beauty of data. And that's the beauty of where we are right now. I think even in the last couple of years, this technology, particularly around building analytics, has just come on leaps and bounds. These buildings we're talking about now, and even all the different systems, and it's great to hear about such an innovative approach that you're taking, Michael, you know, with your tenants, but all these different systems, these buildings, these environments, they're data-rich environments right now. And we have the technology now to be able to connect in, to be able to collect, to be able to structure, to make sense of that data. We're able to analyze that data. We're able to identify the trends. We're able to identify the patterns that can really help us with those types of optimizations I spoke about earlier. And I love to give examples again, because I think they're a great way to kind of explain, you know, in a building we were across recently, the data, the platform was able to help us identify an issue with a chilled water valve. Right? It seems small, but the BMS was telling us that chilled water valve was closed. But we could see the supply air was low, the return air was high, the outside air damper was closed. So the system and the data and the patterns were telling us that that air has to be chilled. Right? So that was able to identify a pattern and a trend that told us that the system flagged to go and inspect that valve. And sure enough, when they inspected that valve, they could see that valve was passing. It was leaking. And here we had the opportunity to identify something before it essentially became a catastrophic failure. Before we got the environment going down and had the tenant complaining, we were able to essentially predict and get ahead of that challenge. And also a bonus, you know, we're saving energy, right? So they're the type of benefits and the type of value that we can really get from leveraging this type of technology. And to your point, we're already doing this. We're already doing it, Jim, to work smarter. We're already doing it to be predictive and to get ahead of those challenges that we for our buildings.
Excellent. Thank you, Michael. And nice to hear you there championing the beauty of data. I guess with a master's in computing, you don't need to be asked twice to get your geek on. So it's good. Data can help us get ahead, anticipate, so we can analyze, identify, predict. And you gave a nice example with the valve there. Some of it's troubleshooting, you know, and this is thrown up by patterns and anomalies, you know, and there can be those learnings in terms of how buildings do or don't work in detail. So now we're really getting into zooming in on what this webinar is all about in terms of tenant satisfaction, and that's over time as well. It's not a one-off, it's an ongoing, continuous process. So we're moving to the heart of the discussion. It's, if you like, the meat in the sandwich, or the GMO-free vegan filling, whichever way you like it. It is tenant satisfaction. So Michael Purcell, I'm coming to you first then. So as we've been hearing, and as we know, tenant needs the elevate, the change, in some cases have become more sophisticated. So how does that flow into future investment decisions? In other words, how important is maintaining tenant experience for better asset financials? How does it fit with the money, Michael?
Yeah, and I suppose it's very simple. If a tenant is happy, they're likely to stay, right? So and it's not, and I mentioned already, tenant engagement, but continuous tenant engagement, because their needs are going to change. And you need to align with that if you possibly can. What's absolutely critical in our, so the fundamental here is to maintain the tenants you have. Make sure at review, obviously they want to stay, or at break they want to stay, at lease end they're going to stay and take more space if they like the building and it works. And we build credibility with them over our term, hopefully, through our property management agents. And the agents are critical in this, absolutely vital. The on-site team is just such an important part of it. And Michael mentioned, like smart tech is incredibly important, because it gives you that in continuous assessment. it's not just a moment here and now. It gives you a continuous water usage, electricity usage, running usage, month on month. So you can monitor weekly if something's working Monday to Friday and it's off on the weekend, fine. You can monitor it monthly. If something's on a bank holiday, why is it on a bank holiday? You can manage it yearly and measure that against the previous year. So that smart tech enables a continuous assessment very easily. So, and what we're very conscious of is we obviously don't want to overburden the tenants with the smart tech. They don't need to know all of it. They just need to know that we are in control and we're doing the best we can with the building we have. So, but the on-site teams are key. So if we're introducing a new technology, we would first demo it with the on-site team. If we don't believe that they have the capability or the knowledge to take it on board and work it and monitor it and use it as it should do, we then need to change something. So there's no point in going out and getting lots of smart tech if it's not going to be used to its maximum capacity and it just sits there. So that's really, really important. And I suppose just samples on the smart tech piece. So I suppose where the smart tech comes into its own that we're seeing is utility monitoring. And like a very easy example, I seem to be giving it all this example for the last few weeks, but water monitoring is really, really easy. There's very, very inexpensive devices you can place on a water meter, and that will monitor spikes in usage. So and that'll be instant. So if there's a spike, there's likely a flood, or maybe the window cleaners are in that morning, possibly, but you know something, and that goes straight to the operation on the ground, and they go, okay, there's a leak, nothing unusual is happening today. There must be a proper leak, and it before it destroys a fit out, that's hopefully found and resolved. So that's really easy, really smart. You can compare it week on week, month on month, year on year, very inexpensive. And that leads into BREEAM in use, very much so, because it's all about reducing water. And then once you have that data, you can go then, waterless urinals, and you can measure that benefit from going that route. And that's where it's all going to. Electricity monitoring, very same principle. If my electricity is spiking at 4 a.m, that means some plant is going on when my tenants are arriving at 7:30. Why is that the case? And during COVID, that was obviously very important because buildings were mainly vacant. So there was no need for plant to be running. So we're just taking that on board and I suppose magnifying what we're doing in that space. And there are companies out there that do it. There are a lot of companies that will monitor the usage for you, which is kind of the easy bit. It's getting the data is the challenge. So we are partnering with a few companies in that space because, and it's simple stuff, right? And I'll just say water because we're chatting about water and it's the easy one, but you could have a water meter on the street, which you can't get to, and you need electricity data point maybe to run a meter, to run a smart tech device. So you need to look at ways around that, and maybe sort of to look at various options, and no two buildings are the same. But once you have the data, you have the data, and then you can strategize 2-3 years down the line in terms of what ESG direction you take. But at least you've ever built up a data. That for us, that's our starting point. The Wi-Fi the Wi-Fi as I mentioned earlier is very important, and there's various companies doing it to avoid way leaves, etc. And the tenant engagement piece, that's again, we put the tenant engagement platform is, again, it's like a tenant app, and it needs to be simple, straightforward, not overload the tenant, and just give them what they need to function every day, etc. But the events are important behind that. So there's no point in having an app with all the information, but you're not running events, you're not really engaging, you're not creating a community in a meaningful way. The two need to work hand in glove. So again, it goes back to the team on site. Have they the capacity to assist you in the tenant engagement platform and to assist with running events and activities for tenants, or do they need local support? So again, for us, it all goes back to the team. Once you have a good team on site, you can really achieve anything you want.
Nice point to round up on then. So Yeah, so happy tenants, as you say, they stay, and better still, they potentially upgrade, but it depends on, say, continuous engagement, assessment, and that, as you said, could be done hourly, daily, weekly, monthly, annually even. And a nice example you offered of smart tech, straightforward one, utility monitoring, spikes in usage, you know, that can point to a number of factors. And a good point you've made also at the end that it is a team game, all of this, you know, it is team working, and in some cases, digitally, you are enabled to do that. And in other cases, you need to reach out and you need to collaborate better face to face. So nice to see we've got a few questions coming through. I think Christoph Schmidt and Ed Hurst have already popped a couple in there. So we're cracking on now. And I'm coming to you in this section now, Mark. So you're hearing what Michael Purcell was saying there. So this tenant behavior, how is it evident in the market? Are they now tenants, you suggested this in some of your charts, are they now choosing what you might call prime stock? And if they are, what is happening to the substandard or the other stock? Where are they going with that, Mark?
Yeah, so I touched on some of this in my presentation, but there's been a general pivot to better quality space in city centres. In the early part of the pandemic, there were some big deals in out-of-town business parks, and it was felt that city centres might lose ground. But the revival of leasing in recent quarters has been driven by occupiers choosing high-quality space in well-located areas rich in amenities, largely in city centres. A big example in Leeds earlier this month, actually, saw Lloyd's swap a business park on the outskirts of Leeds for prime space at Wellington Place in the city centre. And we're also seeing outperformance in trendy parts of London, you know, mentioned the West End and places like Soho. And as occupiers trade up, it is the secondary grade B or C stock in less vibrant locations that will see the biggest challenges in terms of finding new tenants. And owners of such buildings may need to upgrade buildings to meet new energy performance regulations as well, some of which come in next month. And the level of capital expenditure required may make some of this unviable in some locations. And these buildings may end up being converted to other uses, hotels, residential, and some of that is happening right now, actually.
So yeah, so nice point. So you distinguish between out of town and city centre, and generally, well, obviously a trend towards high quality, but also in well-located areas with good amenities, and most of that's pointing towards potentially being in the city centre. Nice flag on energy performance requirements, changing, only going up, and in some cases, this may mean some properties are effectively going to be dropping off the bottom of the ladder. Questions about their viability, assets stranded, can they be turned into something else and reused? So there's going to be some tough decisions to be made in terms of the balance sheet down at the bottom of that list. So so now, Michael Young, if I come to you then, so how can operations team actually drive this superior experience for tenants and building users as well? What can they be doing in this marketplace?
Yeah, thanks, Jim. Yeah, so I think operations teams are critical here. We're speaking a lot about the expectations that tenants are putting on building owners. We know the building owners will be pushing that expectation and that responsibility to the operations teams. And in a lot of cases, those operations teams, again, are the project management companies, the facility management companies that are looking to deliver for the building owners and the tenants. So the challenge is, I guess traditionally a lot of the operations teams, they wouldn't have the technical skills and they wouldn't have that level of hard skills to be able to really deliver now these level of optimizations, this level of value, the significant expectation now that's being pushed on them. In a lot of cases, they would have to go and look to bring in third parties, to bring in firms. And Michael, again, there was mentioning about, bringing in Wi-Fi companies to be able to help them. Michael also spoke very, very importantly about user adoption and technologies. And really, it's very, very important that the operations teams and the people have the skills to be able to deliver. And that's been a huge challenge in the past, particularly around this type of technology, because it has been very, very services heavy. And I'm going to make a big plug for the technology again here with my geek hat on, Jim, right? Okay, is that the technology really has come on leaps and bounds even in the last couple of years. And we've been able to bake in a lot of that expertise and know-how now into a product, into software that can be deployed across buildings by operations teams, to really plug in, to really be able to allow non-technical users, right, to really be empowered to be able to get visibility and transparency into what's going on in the building. Those issues I mentioned earlier and spoke about in terms of the chilled water valves and fan speeds running excessively, they don't need a team of experienced consultants to identify and assign those as actions that can be help improve a building. An FM now, or operations teams with little to no technical expertise, can get these alerts. They can get these actions. We have some of our partners now and some of our property management firms, they've got FMs who really just have soft skills, but they're really empowered. They have traditionally in the past, and I'm sure Michael Purcell is very familiar with this, they would have a BMS vendor coming on site maybe once a month for a day. The BMS vendor is an expensive resource. They'll sit in front of the screen looking at the BMS, and the building owners and the FMs have no idea what they're up to. Now, the FMs are able to get alerts assigned to them on specific issues and optimizations that they can see that can make a big impact to the building. They can assign them on a platform to the BMS vendor. So when the BMS vendor now is coming on site, they're able to say, hey, A, B, C, D, please work on those. They're going to make the biggest impact to our building. So here's where the operations teams now are really getting empowered. They're really able to step up and deliver both in a predictive way and also in a helping optimization and working smarter, like we spoke about earlier, to really deliver for the tenants and the building owners.
Excellent. Some really nice points there, and bringing the people factor back in terms of skills, which has been talked about a lot, obviously, across the industry. As you say, technical expertise and excellence maybe isn't in-house, and there's some pressure to outsource to third parties. But then obviously you pointed to the transition towards expertise being baked into the software. And this is then empowering those non-technical users, and it's giving them the ability to make decisions and make choices in terms of procurement and management. So we're at an interesting stage in terms of the people and skills, and how that is moving, sometimes in tandem with the technology, sometimes less so. So some nice points there. And I'm going to come back to you now, Michael Purcell, I think, just for what last little comment or two. You covered a bunch of particulars earlier, but if I just give me a couple of top tips. So if I'll give you the situation where a core asset was fully occupied, but then the numbers are dropping, tenants are not renewing, you're on the slippery slope. Give us your top tips for a couple of strategies to help lure them back in, Michael P.
Sounds like a miracle you need. I suppose it's kind of repeating what I said. If you've continuous engagement with your tenants, you should know that way out, and then you can plan ahead. And if they're telling you, listen, we don't need all the space, we've got to downsize, fine, build a plan around that. At least all your stakeholders are aware, and you can feed that back into the greater investment team. I suppose it's listen, everything, and going back to what Mark said earlier, buildings being repurposed from office into resi, like that's happened all over the decades, the last 50, 60 years, that's been happening all the time, just at a slower rate. So now that lease terms are typically shorter, you don't have your nice 25-year lease and you can sit back. They're a lot shorter, so you got to be much more engaged. So it's really just an acceleration of that whole journey. But the tech allows you to do that. The interesting piece with CIM, I suppose, it's potential to break up what was traditionally seen as standard functioning operations, in that if I hope there's no M&E consultants on this, but if you're an M&E consultant that's paid, an annual contract, quarterly contract, And it's very hard to actually measure that, because in terms of how many times they've visited site to fix a problem, how long they've been on site. But with some of the smart tech now, you can measure that within a half an hour. So after the end of the year, you can say, well, you were only in X number of times. These were all the issues. Can we review the maintenance contract and the costs and align that to the actual need for the building? So it probably just disrupts that market. The other piece is what tenants are asking us a lot, and this is no different. Tenants were asking us 4 or 5 years ago, in that they need to see utility usage, waste usage, water usage, etc., for their own ESG reporting credentials, and that's only going to get bigger and better and accelerate more. So, wouldn't it be great? And we're trying to resolve it ourselves, in that you're going to have to disclose this information anyway, as landlord to tenant. So if you can do it in a smart tech way, so either give them monthly or quarterly downloads of the KVA electricity usage, and that streamlines that, and they get credibility, going, well, great, I've got my last 3 years of data, brilliant, and it's been given to me very seamlessly, very easily. I don't have to go chasing it, which is a huge headache for tenants at the moment across multiple buildings, chasing the data that they need for reporting. But if smart tech can slot into that and fix all that, that just builds huge credibility. And I can see it when it comes to, it hasn't really happened yet, but in terms of sales, so future portfolio sales should, in theory, in time, be able to provide in the data room, here's all your utility usage for the last couple of years across water, gas, electricity, and it's transparent, and there's a report to back it up, and it's real data. It's not estimated, it's real. So that's probably where we're going to, maybe more and more. But sorry, going back to the original question, you should have a good idea if your tenant's unhappy very early in the process before lease end, hopefully, but you never know.
Yeah, exactly. Yeah, nice point. Yeah, know what's coming really and why, as you pointed out. So you have a chance perhaps to respond, but better still to anticipate some of those changing requirements. And real data can help them with their reporting, and of course builds credibility. So we're into about the last 10 or 15 minutes. I'm going to give a name check here for a couple of the questions here, and I'm going to ask the panel if they can do a little multitasking. So it's going to be a busy last 10 for you guys. So if when you're not speaking, maybe if you could try, if you feel you have something you can offer to the questions. So I'll read the 2 questions you'll see in the Q&A at the bottom. And we've got a third now there. So Christoph Schmidt is asking, as for trust and maintenance and leaking, are health risks related to moisture and mold related issues on the radar? Ed Hers is asking, with the progression of smart tech in buildings, do the panel see the day when reactive maintenance driven by AI, constantly monitoring building data, will replace current PPM driven maintenance, apart from systems which require consumables? Nice question there from Ed Hers. And Shwek Hollander, are there BMS companies standing out in the market and offering something more than just the same as everyone else? If so, could you name some? So they're asking for some actual suggestions there. So if you've got a minute, guys, and you feel you have something to offer, if you want to do a little bit of typing while others are speaking, which we will not consider rude. So we're into the last 10 minutes, we're into final comments, and we're a few questions to wrap up this wonderful debate. And I'm going to start with you, Michael Purcell. So quickly, we've just got a couple of minutes each. So you're working with different property management companies, external firms appointed to buildings. So my final question for you is, with all this going on, how do you actually maintain control and accountability over the operations across your portfolio to ensure all these lovely things we're talking about in terms of tenant satisfaction actually get met? How do you do that?
Yeah, it's not easy, Jim. And you can't farm it out. You got to be on the desk yourself, really. You got to be on top of it. It's I suppose reporting. We're not in terms of property management reporting. Traditionally you might have a report every quarter or 6 monthly or annual, but that kind of day is gone. It's more real time. So your accounts functions now. You log in, you see if rent is in or not, etc. And I think with utilities and etc., it's just all the same. So it just isn't, and we could fall foul of it. But it's continuous assessment of everything you do. And it is, when you have volume in front of you, that is an issue. So you just need to resource correctly in-house and on the ground to make sure, I suppose, everyone's doing their right job. Like the management and facilities management, it only works if every individual is doing their right job, from accounts to front of house to operations to dealing with day-to-day tasks. So it really is. If one of those falls in any way, it's not a good scenario.
Excellent. So good point to us. As you say, it's not easy. It happens real time, continuous assessment. It's 24/7 and more, but it's a case of everybody doing their right job and doing it well. So you're coming back on that strong theme of it being a team game if you're going to manage it successfully over time, not just as a one-off. So Mark, I'm coming to you for a final thoughts. You opened up the session this afternoon very nicely. Macroeconomic, other headwinds facing the industry, well documented. You presented clearly on that. So I'm going to come to you, put your rose-tinted spectacles on. Final thoughts, Mark. Any reasons to be cheerful? Any positive takeaways? Make us feel good about how things are going to go, Mark, if you can.
Yeah, well, there is a lot of negativity surrounding commercial property at the moment, with rising interest rates, tighter credit conditions, and a stagnating economy impacting investor demand and pricing. With offices especially challenged, given the structural changes that we've talked about earlier. But most economists don't fear a repeat of 2008. Banks are well capitalized, and property has done well with interest rates at their current level in the past. It's just the speed of the recent movement that's alarmed some people. Inflation is likely to fall as the year unfolds, which could persuade central banks to loosen policy again to kickstart the economy. And this will obviously benefit office demand. And as we've shown, demand and rents are holding up well in the best space and the best locations, while flexible managed spaces are also doing well. And landlords and nimble investors that are adapting to all these changes, responding to tenant needs and giving tenants a reason to stay, are well placed to do well. And just finally, tax incentives, transport upgrades and green initiatives also provide some upside in certain locations. But yeah, it's a mixed picture out there.
Yeah, well, almost positive takeaways.
Yeah, no,
it is
positive,
yeah,
positive.
It is mixed. There are some positives in there, as you say, quite right. I mean, we're being realistic about this. As you say, change is always to be expected, but it seems to have been happening really fast, and it's the speed of it in some cases and the relentless nature of it, which is really putting some parts of the market under pressure. Inflation, interest rates, if you watch the business news, is very turbulent, but there are some expectations of them coming down over the year. And of course, the buzzword in corporate circles at the minute is agility. It has been really since the pandemic landed. For physical assets, agility can seem more difficult, but I think we've talked in this webinar about a number of ways in which you can make that kind of flexibility and responsiveness and agility happen within the building environment. So thank you, nice point. So Michael Young, I'm coming to you for pretty much the last word. We're into the final few minutes here. So, so I'm going to ask you, Michael, so what can, or maybe I should say what should, give a bit of a call to action here. What should senior property leaders do better to ensure much higher levels of tenant satisfaction and retention scores? So what should they be doing, Michael?
So look, again, at the end of the day, Jim, we're a technology company, CIM, and technology is an enabler, right? And really, I hope, in the last hour, I've been able to give senior property leaders and people and building owners and people involved in the facility management or property management space an idea that the technology is out there now. The technology is out there that can really enable them to absolutely be much more able to work smarter, like I said, with their buildings, to be able to capture that data across their buildings, but really, be able to identify those types of issues and optimizations that can really make quite a significant impact now to their buildings. And here's the thing, again, with the technology and the advancements, and because it's much more software driven now as opposed to services, it's much more commercially attractive. It is quite a very attractive option for a lot of these types of buildings, and can even, in terms of speed to value, be deployed quite quickly across buildings, and in terms of delivering those insights and value very promptly. Also, you know, and particularly probably for the property management type of companies and a lot of the partners we work with, I hope they also see that there's a huge opportunity for them here now to, you know, to really be able to provide much more value to their clients, who are very often the building owners and the tenants. And there's a real opportunity, like I said, to help their teams and empower their teams to really be able to go out there and deliver significant value for their clients. And finally, look, we're talking a lot here about data. We're talking a lot here about identifying issues, identifying optimizations, even with the, you know, and again, you know, Michael Purcell touched on this earlier, even with the best technology, right? You really need to make it, be able to make it integrate or be adopted more widely by the people using it. And really in particular to help them be able to deliver results. Because if you identify issues and you're only delivering value when you can help them actually deliver and close on action. So a big part of the technology now, as well as is helping these teams to be able to collaborate. Like I mentioned earlier, giving the FM the opportunity to identify issues, but then be able to pass that over to the relevant stakeholder, the BMS vendor, the mechanical contractor, the electrical contractor, and be able to track and manage and ensure that those issues are getting drive to closure to make sure that we realize the value. So again, in summary, the tech is there. It's very powerful. It's very commercially attractive. And I really ask, you know, senior property leaders to get out there and really be cognizant of the fact that this can deliver significant value. I think one final thing probably just to mention as well is very important for all of us, right? Whether we're tenants, whether we're building owners, you know, again, whether it's the property management companies, we all have an obligation to the environment, right? We all have an obligation to really be able to drive our buildings to be much more sustainable with the climate crisis as well. And the wonderful thing is here, it's not often we get a real win-win where we can have something that can absolutely, you know, help with the challenges that Mark is talking about, helping with the challenges that Michael is talking about in terms of tenant satisfaction, and can also really deliver for the environment. And we have a real sweet spot where we are with this technology today that we can go out there and deliver for the environment as well.
Excellent. Thank you, Michael. Really nice closing comments there. So embrace the tech, and as you say, you can meet such as climate obligations, but it's also commercially attractive. It is a real win-win. You know, the business case doesn't exactly make itself, but is very strong. It's all a matter of working together better towards greater tenant satisfaction. So we were just about coming up to the hour. We've used every minute of it. One final thought from me. I would just say that it would be a neat trick for everyone involved in commercial real estate, investors, asset managers, developers, owners, landlords, users, and especially tenants, if a building came with a sticker slapped on the front that read, large letters, satisfaction guaranteed. Sadly, life in the built environment is just not that simple. As we've heard, volatile world, hybrid working, post-pandemic, if you really want your assets to sweat, they have to work not only harder, but smarter, and so do the building owners and managers themselves. As we've heard, tech's a great enabler, but the people involved need to get involved. Talk to the tenants, align with their priorities, match and meet their expectations. Ultimately, use the data to collaborate, connect, and communicate too. So there we go. In closing, big thank you to our hardworking panelists, Mark Stansfield, Michael Purcell, and of course, Michael Young, and our hosts at CIM. Also to yourselves out there, our virtual audience, joining us lunchtime, your desks and on your screens. And we'll be getting to the questions and answers following as well. As mentioned, you'll all be sent the webinar recording please don't forget to complete the very short post-event survey. It's ever so useful for the organisers. We look forward to seeing you at the next session in the Future of Building Operations series. Keep an eye on CIM's LinkedIn page, very active there, and of course in your email inbox. So big thanks all round. Meantime, that's it for today. I've been Jim McClelland, editor at SUSMEAN. It is 2 o'clock exactly. Thanks for watching. See you all again soon.